Things have gotten a little out of hand recently, with nothing but bad news every day and a stock market that's entirely driven by emotion. But it's in precisely these times that dividend investors can be confident. There are some excellent deals available on high-quality dividend stocks. Hello and welcome to Financial Fluence. In this video, we'll go over these 5 high-quality dividend stocks. Each of the 5 of them is trading at a discount between 26 and 41% when I compare their current dividend yield to their historical 5-year average dividend yield. The dividends of all 5 dividend stocks have historically increased for at least 14 and maybe as many as 47 years. They all have free cash flow that is quite steady and dividend yields that are greater than 3%. This means that because of these things, the volatility we saw in 2022 didn't have a big effect on the amount of free cash flow that the business made. First, Republic Bancorp, ticker symbol RBCAA. Regional Bank A Republic Bank and Trust Company has offices in Kentucky, Tennessee, Ohio, Indiana, and Florida. They have increased their dividend every year for the past 24 years, and they currently yield at 3.44%, which is 26% less than their historical average yield of 2.55%. Furthermore, Republic Bank has had good and consistent dividend growth rates of 9.3%, 8.7%, 8.9%, and 7.6% over the previous 1, 3, 5, and 10 years. What matters most is that Republic Bank has a consistent and reliable free cash flow. The remaining funds after all operating costs and capital investments have been met are referred to as free cash flow. When you compare the level of free cash flow to the amount of dividend being paid, does a company generate enough cash flow to pay the dividend? Republic Bank's dividend payout ratio is 34% for 2021 and only 21% for the trailing 12 months, which is a good portion of 2022. This tells me that the dividend is safe for the time being and has the potential to be increased in the future. Walgreens Boots Alliance, ticker symbol WBA. The Walgreens Boots Alliance is a group of retail pharmacies, also called Walgreens, and a drug company called Boots. Its current yield is 5.85% and has increased its dividend every year for 47 years in a row. Historically, it had an average yield of about 3.76%, which has represented a discount of 36%. You'll notice that Walgreens has lower dividend growth rates. The company has experienced 1 year of declines of 2.1%, 3-year declines of 2.8%, 5-year declines of 5% on average, and 10-year declines of 7.8%. However, this is a dividend stock that has grown its dividend for 47 consecutive years. It has a 1-year dividend payout ratio based on free cash flow of 33%, which increases to 48% when you look at the trailing 12 months. Even though this figure is larger, only 50% of the additional cash flow is needed to pay the dividend, making it still relatively low. According to this ratio, the dividend is now quite safe and has room to grow in the coming years. Universal Health Realty Income Trust, ticker symbol UHT. This is also known as a REIT. A REIT is similar to an index fund, but instead of buying rental properties on your own, you can own shares of UHT, which already owns a variety of real estate properties. UHT focuses on healthcare and human services facilities all over the United States, including Nevada, Texas, California, and Arizona. UHT, for example, has raised its dividend for 37 consecutive years and currently yields 6.47%. Historically, their average yield has been about 4.12%, which is a total discount of 36%. UHT has lower but very consistent dividend growth rates of 1.4, 1.5, 1.5, and again 1.5 for the 1, 3, 5, and 10-year average dividend growth rates. Yes, these payout ratios are higher than the last 2 dividend stocks for the last 12 months. However, REITs are required to pay out at least 90% of their taxable income every year in order to get a special tax status, so high payout ratios are normal. The key to looking at this metric is the stability in the trailing 12 months, which includes all of 2022. Despite the market volatility, UHT continues to generate significant and stable cash flow, and the dividend is safe and very stable. And before we continue, guys, don't forget to subscribe to the channel, hit the like button, and turn on that notification bell to be notified every time a new video is uploaded. Let's get back to the video now. T. Rowe Price Group Incorporated, ticker symbol TROW. T. Rowe Price is an investment management company that works with both individual and institutional investors. Its current dividend yield is 4.47%, which is much higher than the average yield of 2.72% over the past 5 years. and adds up to a total discount of 39%. T. Rowe Price has experienced excellent dividend growth rates over the past 1, 3, 5, and 10 years of 15.2%, 16.1%, and 13.4%. Even though these rates are amazing and probably can't stay at this level for a long time, they're still great for the moment because of how fast inflation is rising. Based on these ratios and data, the dividend from T. Rowe Price is safe right now and has room to grow in the future. The company has a very healthy one-year dividend payout ratio based on free cash flow of 59% and an even lower one over the trailing 12 months at 35%. Next is Comcast Corporation, ticker symbol CMCSA. Comcast is a media conglomerate with many different types of businesses, such as cable communications, cable networks, entertainment films, and theme parks. Yes, even theme parks. Comcast has raised their dividend for 14 consecutive years, and their current dividend yield is 3.39%, which is higher than the 5-year average yield of only 2.01%. Over the last 1, 3, 5, and 10 years, Comcast has had very consistent dividend growth rates of 8.3%, 9.4%, 7%, and 11.9%. When dividend growth rates are this high, they help protect dividend investors from the higher interest rates we've never seen before. Comcast has a very stable dividend payout ratio based on free cash flow over both 2021 and the trailing 12 months at 42% and 34% respectively. Based on what we know, the dividend is very stable at these levels and insulated from a dividend cut. The reality is, there are so many dividend stocks, but hopefully these 5 that I highlighted in this video might be good options for your portfolio as well. I hope you learned something from this video, so make sure to leave your thoughts in the comment section below, share your thoughts on these dividend stocks and any other dividend stocks you're interested in hearing more about. And don't forget, hit the like button, subscribe to the channel, turn on the notification bell, and I'll see you in the next video.